first one is like, if you don't trust the sponsor, run, don't walk. So, there's so much that goes into these deals and people need to be on top of it. So if the sponsor thinks that, hey, we're just going to turn it over to the property management company and let them run the deal, it's like, the chances of success are, I'd bet against the deal versus betting for the deal at that point. So, you really need to be hands-on. So, that's one thing that's really important. And do they have they had business acumen? Have they worked in finance? Have they worked on Wall Street? Have they run businesses? Because, it's not a game. I mean, this is real money and you have to really be on top of these assets. And so those are the things that I personally look for. And then diving into the deal, there's a whole host of things that I look at.
Are there, how many passive deals are you in approximately?
20.
20. So you're in and are those with 20 different sponsors?
Yes.
Wow. And are they all multifamily?
They are all multifamily.
I see.
So I see a lot, and some of those have exited, so it's probably down a few, but
How many of those would you reinvest with?
Probably one or two.
Wow. No kidding.
Yeah.
And you may have already answered the question as to why, but I can't help but asking why.
Because I look at the reports that I'm getting sent, and these people clearly don't know what they're doing. They're not on top of things. They're slow to respond. Their K1s aren't on time. I think that those are the things that are kind of pet peeves for me. A lot of it has been they've gotten lucky because of cap rate compression versus true operational outperformance.